I think that Turkey has always been perceived as a very dynamic economy, obviously an economy that has grown tremendously over the last 10 years on the back of political stability, an economy that has become more diversified over time and with very good banks, very solid banking system and very good corporates as well. Needless to say, in a very difficult neighborhood, as we are all experiencing at this very moment, and as of recent date, with rising political tension as a result of, the two successive elections that we've seen in June and also November. So I would say Turkey figures prominently in many benchmarks, so it's very difficult to ignore it. However, the short-term worries about Turkey and Turkey's political future has put a damper on investor interest at the moment, right? Until people figure out exactly what is the political course direction that Turkey will take going forward and what sort of policies and economic management. Well, after the failure of the government to form a working coalition after the June election, I think that the November election came as a relief. I think that all in all, the result has been investor-friendly to a point, in the sense that people like the fact that there isn't an absolute majority to change the constitution. Because as an investor, people want certainty, but also you want checks and balances. And the current balance of power probably provides that, insofar as any change to the constitution would require cooperation among parties in the new parliament. So for the short term, I think that it's been a relief. Although I would say this pullback from the initial enthusiasm reflects the medium and potentially the long-term worries about the political challenges that Turkey faces on top of the geopolitical challenges. Oil has been, obviously, has boosted Turkey in the short term, in the sense that a big portion of Turkey's current account deficit is oil, and obviously oil has come down substantially, more than 50% over the last year. So this should be positive for Turkey. So it makes it helps Turkey to offset that very negative current account balance that carries structurally. However, in order to address that current account deficit, other things need to happen. So Turkey needs to become more productive, needs to boost long-term capital flows, increase productivity, and so on. So it is not an issue alone of seeing oil prices coming down. Other than this, I would say there is a slightly negative aspect to this oil reduction in prices, given the fact that the Middle East is a big importer of Turkish exports. And obviously, lower oil prices mean for those countries a lower purchasing power, if you want, to bring more imports from this country. So that would be a negative thing. On the other hand, Europe is benefiting from lower oil prices, and you could see that maybe there would be a rebalancing of those export flows that may allow Turkey to redirect some of those exports that used to go to the GCC and Middle Eastern countries into a higher flow into Europe. This is my first time in this conference. I have been to other GFC conferences in Brazil and Dubai. I got a very good perspective of how the conferences work as a format. I was very pleased coming to Istanbul to discover that the attendance is phenomenal, I would say, and the quality of the speakers is very high caliber. So I would say from both a corporate issuer and also a lending perspective, the players seem to be here. And I was very much able to get a lot of good insights from local players during these 2 days, on top of having a feel of what is going on in Turkey through attending this conference. Well, obviously there is the reality of the local market, and there is the reality of the Turkish lenders who have a very good market cover to a degree. So a lot of them are relationship banks for many, many corporates that might otherwise be issuing in corporate bond markets. I would say a lot of the domestic issuers already are in a very good financial position, so seeing them coming to market is more difficult because they have that banking relationship and they also have a good balance sheet. So they don't need the funding at this stage. I would say in general, good, well-managed Turkish companies would find a home in international portfolios, I would say very, very quickly. But they would come probably at a premium to other things that we have at the moment in other countries. So if you take, for instance, with the pullback in commodities, many companies in Latin America and Africa, and many governments in Africa as well, have been trading at a discount, and those, depending on your views, may look at least tactically more interesting at the moment. Other than that, once again, I would say top-down considerations about Turkey are making people a little bit more prudent at this stage until they figure out exactly what will happen with the new government and with the new macro management.